Welcome to the Sykes & Company PA video blog.
Tell me, what is the fundamental foundation for expanding your margins?
The absolute foundation is having numbers with integrity. That would be having a balance sheet and a P&L where the balance sheet items are tied in, your inventory, your third-party receivables, your payables, your notes, your fixed assets, your depreciation, amortization of any goodwill. Everything is tied in on an ongoing month-to-month basis. When you do that, then those adjustments flow through to your P&L. Of course, you're recording your revenues, you're recording your expenses, but you have really good, solid numbers to understand where it is that you are in the life of your pharmacy for that particular month, year, or as the case may be. Once you have that foundation in place, then you can begin to key in on what some of the percentages are for the key items that are so critical to you making money, and that's what's in your cost of goods sold, which you're paying for your cost of goods sold, net of rebates, and what your ultimate gross margin is, net of rebates. Because that number, your gross margin, and the purchases, net of your rebates, are the most important aspects of your financials in determining whether you're going to be profitable or not. We have retail independent pharmacies that I'll see those numbers running from the high teens to the mid 30s. Now, why is that? Why is there such a difference in margins from 18, 19% up to the mid 30s? The difference is in the kinds of patients that pharmacies are serving, the types of scripts that they're filling, the types of reimbursements they have in whatever particular section of the country it may be. All those things factor into those percentages. But the most important thing is how well they're buying through their cooperative, through their buying group, through their wholesaler they may be dealing with directly, or wholesalers, I might add, because a lot of people will have a primary wholesaler, a secondary, and then they'll have some outline of generic houses that perhaps they're dealing with. But all of that becomes part and parcel to making sure that your gross margin is maximized. And if your gross margin is maximized, then your P&L, if your expenses are under control, should be in that 4 to 7% range that we see most pharmacies in on a pre-tax basis. So that's how I would respond to that, Virginia, because it does start with the fundamental accounting system that has to be in place. And then it's how well you're doing that buying and what mechanisms you're going through to optimize that process.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.